Chase by Dallas, make it hurt.
Good day, everyone, and welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. I'm your host, again, Dominic Green, Managing Partner of Tenneco Commercial Real Estate Services here in the Dallas area. So today I wanted to, tap in or check in with everyone. As you know, this is the platform where we're having discussions about investing in commercial real estate, because commercial real estate is vast and wide. There's several sectors. As I always say, look for the niches and opportunities to invest in commercial real estate. Not necessarily the broad themes, because there's pockets where people are making money in commercial real estate, regardless of the headlines, regardless of the economy. Even though real estate is cyclical, there's ups and downs. As you know, this stuff is in favor, out of favor, especially with this, with the COVID, retail and all that stuff was retail, office, hospitality, hotels especially, were way out of favor, struggling in some instances, and some sectors are already struggling. But there was niches and pockets in there that were doing fine, as I explained, in other prior videos, as well as the darlings has continued to be industrial and multifamily. Again, there's sectors in that as well that are doing real well, and sectors that are having some challenges, to say the least, because of COVID. And going forward, long-term wise, there's going to be opportunities. There's a reason why a lot of these private equity groups and funds raise all this money, looking for opportunities. So, as I was told, and I read, somebody's always making money. It's just being reallocated to certain places. So no matter what the economy happens in the economy, somebody's always making money. But nonetheless, today I wanted to kind of reiterate when I was talking about, I want to say maybe this is maybe an episode ago, when I was talking about the opportunity in workforce and affordable housing, the ability to, not only address a problem, but also make a profit too. Because at the end of the day, when you invest in commercial real estate is about the people, and in providing that and taking care of the people, you'll make a profit. And with that profit, it's about taking care of your family, friends, loved ones, supporting, missions, charities, donate, all the things above that are most important to you. Generational wealth, pass on to, to your kids and their kids. Having ownership, which, provides leverage and leveraging that into influence and having power and having a voice, especially in our community, is about owning, right? What do we own? Not what we rent, what we own. But nonetheless, seeing an article here, because I am in Dallas, on the Dallas Morning News. It was front page for a while, and they were just talking about how, they were highlighting how rents have hit a new high and average about $1,200 a month. Now, if you're paying attention to, the sector, that rent has been increasing even prior to that. But the downside is that people's wages haven't been increasing. And, COVID kind of exacerbated some issues. Although, people were locked down and losing their jobs, multifamily still, did pretty well as far as rent collections. Student housing, surprisingly, still did good in rent collections. Senior housing kind of suffered some, especially the skilled nursing homes. You know, with the ability not to necessarily do all the tours and lease up and restrictions and all that jazz. But it's still gonna be a need for that because people aren't getting younger, people are getting older, and there's different sectors in that. But with affordable housing, it just highlights, as my friend tells me, buy the rumor, sell the news. When it hits the news, it gets to a point where it's getting too late, and everybody starts jumping in and start getting the same idea. But even with that being said, this is still a long-term problem. Um, like here in Texas, if you're looking at the read the article by the National Low Income Housing organization, I believe it is, and they put out they put out papers. So has Harvard, um, Nova Gardic, um, about just the the huge demand but minimal supply, and then the contributing factors to that. And so like here in Texas, one of the reports shows that 49% of Texans are cost burden, which categorizes that they're spending way more than 30% as the metric they use, 30% of their income or more on rent. So if 30% is going towards or more going towards rent, there's very few left over for the other necessities that you need to sustain life and enjoy life, right? And if you're talking about seniors, I mean, as you get older, for some, medical issues is an issue. So now you're having to pay for prescriptions, not subscriptions, excuse me, prescriptions, drugs, and therapies, and all the other stuff that goes along with just being older, right? And so now, according to some of these reports, they're making decisions on, can I actually afford this medication? At the end of the day, I still need a place to live. Um, can I figure out another way to do this? So there's choices being made. Um, but again, like I said, the report about here in Texas, about 49% of Texans are cost burden, and like I said, inflation, prices of goods and services are increasing more rapidly than people's wages. I mean, again, like I said in the prior video, people fighting for 15 hours, a federal minimum of $15 an hour, whereas right now, 7.25 still, it's not 8.25, something like that. So you got to think, if the cost of living is going up, but the amount of income is going down, or it's stagnant necessarily, not going down, but stagnant. I mean, your wallet is being stretched pretty thin, and rents are going to continue to increase. Commercial real estate in general goes up, as in, interest rates eventually will go up, or as inflation goes up. And according to a couple of reports, some of the most severe areas, and in the country, cities they put it, it's like Austin, Phoenix, San Diego, Orlando, Houston, Dallas, or just to name a few, are some of the areas that have the largest cost burden of individuals when it comes to housing, affordable housing, and if you go down the spectrum, even very very low income extremes are having trouble as well. So I think this presents opportunity. We know that multifamily is a necessity. Having a place to live is a necessity. Home ownership, although interest rates are low, competition is high. There's not a huge inventory of homes, especially in that range that's around, let's say, probably now 195 to 275. I mean, if you look at even data on that, and the benefit, the great thing of that, because I'm in real estate just in general, I have access to reports and stuff like that. But I'm doing this on a daily basis anyway. You can see stuff that's in that range is having multiple bids on it. So you have people being priced out of their homes, and then look at the other side of that. Somebody selling their home. What's their biggest concern? Can I find somewhere else to stay? Because I'm going to have to end up paying more. So competition is fierce. Um, Supply is limited. The price of homes are going up, you know. So, and yeah, and then wages, and then from an investment standpoint, investors were already doing the taking the strategy of doing value adds, and by doing that, you're taking, in most cases, they're aiming at the B and C class properties, the older properties. They're going in, renovating them. With that comes some displacement, depending on their business model. Because depending on the occupancy, you gotta somehow, some way figure out how you're gonna renovate those units to meet these targets, right? In the next 24 to 36 months, even though you have natural turnover. But showing you gotta meet these metrics so you can hit these numbers. So there's gonna be some displacement. Some individuals, some of them, they're just taking the property to the next credit level, right? Next income level. So no longer the blue collar, more white collar, or in between gray collar and white collar. People that have the ability to rent due to not because they need, not because it's a necessity, because it's a lifestyle they want to. They have flexibility. Their jobs are a little bit more high paying. So you're taking what was naturally affordable supply out of the market, going in, raising the rents, with the goal to get about maybe at minimum $100 to $250 per unit a month in additional rent for the renovations to get closer to market in that area. So again, that creates the supply issue. There's still more demand, and then affordable housing is just one of those things that you don't have to create the demand. The demand is already there. The need is already there. The supply is lagging. Even with low-income housing development, that's still a process, right? You still have to get the tax credits and go through all that regulation part of it just to get to the point to where you can break ground, and then you're breaking ground on new development. For those of you who ever seen a new development pro forma or understand development in general, those properties don't come online in a year. You know what I mean? It's going to take some time before that supply actually kind of affects the market. 24, 36 months, depending on how substantial the construction is and permitting and weather and all that other good stuff, right? That just goes into doing development. So, looking at the immediate need, we look to preserve, right? And I've been researching the best models to actually do it, figuring out the people that are best in class to do it, and then Turner Capital and Avantha are those guys. So I've looked into take their models, kind of combine the two, and put together a plan. Well, I'm already working on that, but and the pitch deck and all that. But looking for like-minded individuals, partners, you name it, to leverage that those business models that preserve affordability, preserve capital, but provide a market rate return. As I said, there's no profit, there's no nonprofit without profit. And listen to that talk with the founder of Turner Capital, talking about you had to create a solution that's for profit in a sense that makes it appealing to get it done. And so just kind of leveraging what they do, understand their model, understand that it's when we're talking about preserving affordability is really you got to look at the income or the revenue, and you got to look at the expenses. Right, so you're not necessarily trying to raise rent to the max. Maybe in some cases you will slightly, but it's really looking at the operating expenses and reducing turnover is the biggest thing. Because your turnover costs, every time somebody moves, you gotta get that unit back up and ready, and then market it, and then put it back on the market. All that stuff to get it leased up again. But if you can reduce that and create an environment where people want to stay longer term and reducing your turnover costs, thus, you reduce your expenses. And then, working for efficiencies in there and, just managing it. So kind of taking the best practices of both those companies that I've looked at to figure out the model, the best way to do it, and to be a participant in addressing the issue and creating value for both sides. For the people that need the affordable housing, for the investors that are looking to put money to work, especially Black people, put our money to work. Um, we all win in essence, because there's more enough. I mean, according to that statistic, there's a shortage of like 7.2 million affordable rental units. There's a shortage of that. I mean, that's a lot of units, and even the biggest companies only have that do multifamily on large scale probably only have maybe 60,000-70,000 units in total. You know what I mean? But there's quite a few of them that have that. But still, you're talking about 7.2 million, and it's probably, and that's from that report, that could be slightly off. Who knows, more or less. But I do know that from experience and just looking and researching that rents aren't going down. People are offering concessions, but they were trying to maintain that rent number. So rents ain't going down. The cost of goods and services aren't going down anytime soon. Wages are still trending in stagnation for majority of people. So there's opportunity there. And I think this is a way for us to get in, with purpose and profit at the end of the day. But address that issue, especially in our communities and other communities as well. When I'm always thinking, I'm thinking scale. So yes, taking care of our community, but also investing in other communities, having ownership there as well, because this is a big problem. And I think there's enough room for everybody. There's not one person that's going to be able to solve it, so it gives us opportunity to get in there. If we have to start small, but gradually. At least in my thought process, my vision as having that platform, starting small, learning, getting better, and creating the systems, the people, improving the teams, and then gradually get bigger and bigger. Because the bigger check you can write, the more properties we can take care of, and then scale it from there. So, that's kind of what I wanted to come here, talk about here briefly. As always, leave a comment, share, subscribe, join the Facebook group. Love to continue to have this conversation offline, collectively, leveraging everybody's experience, knowledge, thoughts. As I always say, I don't know everything, and there's just too much to know. Everybody has come from a different perspective. My experiences are totally different than everyone else's, but I think collectively getting into that use of our collective knowledge and leveraging that, I think that together we do more as opposed to doing it individually. So again, thanks for guys tuning in. Thanks you guys for being a part of this. Without you guys, none of this is even possible. I think this is just, like I said, a platform where we all can come together, have a discussion, be aware of things. I like to share stuff that I've done, doing, research, thoughts about, and just let it go from there. And hopefully, people on the platform will come together and partner up, work together, and like I said, invest in commercial real estate as the foundation, and let that be the foundation for other things to invest into, repurposing those funds to other things. Because there's a huge problem, especially in our community, I'm on the side of what can I do regarding economic power. Um, and this is just my contribution. Everybody has their lane. I think this is probably mine. Um, so those who are kind of that same mindset, let's continue to share. Let's continue to work together, provide the information, connect, link up, and invest. So until next time, until next Wednesday, um, again, share, subscribe, leave a comment, criticize. You know, I'm not above criticism, but share, subscribe, comment, join the group, send me an invite to any groups that you're a part of. Let's continue to have this discussion. And again, until next time, happy investing. Deuces.
These my dollars make it hurt.